Is income tax theft? Does property tax mean you really don't own your own real estate? Are sales taxes and VATs unfair burdens on the poor? These are many of the questions that we talk about when it comes to taxes, but it really kind of is in the micro. Really, instead, we really need to talk about the macro. Is what is the best and most fair way to tax people? Nobody likes taxes, but in a society where people believe that the government has some sort of role to provide public services, they are an inevitability. I'm not going to get into the arguments on what specific roles and responsibilities the government should and should not do, but I am going to go on the assumption that we're going to have the government at least do something. That can be whatever, big or small, you imagine in a perfect world. And what is the fairest way that it should be paid for? Like, what taxes are the least harmful to the economy and the most equitable, in the sense that those who benefit the most from the government services pay for them, and most people can pay for them within their means? It wouldn't really be a fair system, for example, say that only the poor pay taxes, even if the poor disproportionately benefit, because the poor don't have the means to pay those taxes. So you wouldn't really generate any revenue anyway. But that's a bigger question. What is the most fair way to tax a populace? I'm going to go down the most common ways historically that this has been done. Are income tax, tariff, other duty taxes and vice taxes, property taxes, and sales taxes. There's also been wealth taxes historically, but wealth taxes have been a failure in most countries. They have tried, and have barely, as long as there are international alternatives, they're just not going to really work that well. So let's first start with income taxes. Income taxes are the most direct way to collect taxes. They're also, in most developed nations now, the single biggest chunk of revenue for governments. And really, with the enaction of the 16th Amendment in the United States and policies for progressive income taxes elsewhere in the world, it allowed the funding for governments to expand well beyond their previous limitations, whether to finance wars or to have extended social safety nets. The problem with income taxes, though, is that they are very difficult to collect. And on top of that, they're not really the most equitable way to tax people. And they create probably the most resentment of any tax system. First, collection issues. There are many countries where tax evasion is a serious problem. And there are those who are the rich and powerful, in theory, should be paying the most taxes, have the ability to lobby and write rules that they can legally avoid taxes. The same people who are advocating for, on one hand, as I mentioned my Why Old Money Supports the Left video, who are advocating for very strong progressive taxations that hit the rich, design it so that they don't particularly get hit. And if your wealth is inherited, that money has already been earned income, so you don't have to pay income taxes on it unless you gain additional income on it. And then, well, somebody probably a little more progressive would criticize me and say, well, what about just increasing the capital gains tax to the level of income? Well, that's not going to really solve things either, because you have two issues with that. One, that's effectively just double taxing inflation, because a lot of capital gain, especially in things like real estate, is really just compounded inflation. So if you buy a house for $50 in 2000 and the price level has doubled since then, you sell it for 100, in real terms, you didn't gain anything. But on paper, your property value doubled because of inflation. And to partially compensate for that, you have a lower capital gains tax rate. A high capital gains tax rate discourages long-term investment relative to short-term investment. Any trade that is held for less than 1 year is considered ordinary income. And so if you don't have any differentiator between ordinary income and long-term capital gains, It's going to incentivize people more for shorter strategies. Like they're not going to invest in long projects that take more time to deliver. Instead, they'll maybe invest in the hedge fund manager doing high frequency trading instead of the venture capitalist. Is that something we want as a society? I don't think so, but that is kind of the incentive structure you're creating by equalizing income and capital gains tax at a high level. But in terms of income tax in general, you have the issue again with compliance. You have the issue with loopholes. You also have the issue of resentment. People don't really like the idea that they have to give half of their earnings simply just for existing and being a productive member of society, especially if that money is being redistributed outside of your own community and to people that you really share no affinity towards. And that's kind of the root of the problem with income tax. It's like with other taxes, you can avoid them for simply not using the service or buying the good that's being taxed. Whereas income tax, if you're not inherited wealth and you need to actually make a living, you're stuck paying for it. And that's why people compare income tax to slavery, because you basically have a guaranteed minority partner in the government or everything you do that you have to give a chunk of your income to no matter what you pursue in life. It's fundamentally not fair, and it's fundamentally a violation of economic liberty. And it's also very unpopular. The main advantage, again, you can raise a lot more money with an income tax up to a point. The Laffer curve is true above a certain level, or people really will stop producing. But so, like in the history of the world, though, it has been the most successful source of revenue and has allowed the government to spend as much as possible. The next tax we're going to be talking about is VATs and sales taxes. VATs and sales taxes link taxation to consumption instead of income. And so in theory, you avoid the problem of just being taxed just to exist. You don't have to worry about compliance because it's done at the point of sale. So instead of having to go after individuals not paying their taxes, you go after businesses who do not collect their sales tax. And it's a lot easier to enforce as a result of this. The downside really to this is that it's a regressive tax. So those who are lower income are paying a higher percentage of their income on sales taxes and VATs. In theory, you could make a progressive VAT, but then that goes back to the same problem of income tax. Like, is every store going to ask how much income a given person has? Or you can maybe eliminate the VAT on necessities. But then you have to define, like, what is a necessity? So it gets tricky. The main problem with VAT and sales tax is that it's also, especially VATs, they're not like shown on receipts for the most part. So people don't realize how much they're being taxed. And so taxpayers aren't really aware of the cost of this kind of thing. So it allows people to support maybe more fiscally generous policies or higher tax regimes than they would if they were more aware of the consequences of it. And sales taxes also just have a certain limit. Like if sales taxes get too high, it's going to hurt the economy and people are going to spend less money. And therefore your revenues will go down on sales taxes because people will be spending less and buying just less goods in general. And it also makes the taxes very cyclical. This is also a problem with income tax. They're very economically cyclical. In good times, people are making more money. Your tax revenues go up as a government. When bad times, when businesses are failing and struggling, and people are getting laid off, your tax revenue goes down. And having this cyclicality to your tax revenues makes it hard to properly budget in the long run. And so that's a downside of both income tax and sales tax, is that the economic cyclicality of it. And then really the other, in a practical purposes, since we already have an income tax, I generally oppose putting a VAT into the US system or consumption tax, because you're not going to get rid of the income tax. You're just going to switch to a more European model where you're paying very sky high income taxes and sky high VATs. And those who advocate for the VAT don't really even if they publicly say, yeah, I'd like to cut the income tax in exchange, there's no political will to overturn the 16th Amendment. And so as a result, what you're going to end up getting, even if income taxes go down in the beginning as a compensation, they'll normalize when the government, once again, overspends beyond its means. And so you'll end up with the worst of both. So that's the pluses and cons of sales tax. The next one we're going to be talking about is property tax. Property tax is really just a flat tax that you pay every year on the value of any real estate that you own. There's a lot of advantages to property taxes. One, they're less volatile. Real estate prices historically, but that might be changing just given fundamental changes in the real estate market, have been less volatile than the stock market and the economy. And so as a result, your tax revenues are going to be less volatile if they're primarily drawn from property taxes versus income taxes. And property taxes on the local level have been able to finance most local governments and most public education systems in the United States. On the local level, they've been the most effective form of taxation. So the question is, why can't we just scale this up to the national level? Because there's a lot of advantages to having property tax as your primary source of income. One, again, it's less volatile. Two, it's very hard to evade. You own the property, you have to pay the property tax. Otherwise, the government has the right to take your property. You can't understate it. You can in theory write loopholes, but it's very difficult. Like if you own the building, you have to pay the tax. And unlike sales tax, it is progressive. Wealthier people own more real estate, or they own more expensive real estate. So if you really want to tax the rich, the most effective way to really tax the rich in the most equitable way is through higher property taxes. The main downside is if you own real estate, you have a higher cost of carry, which basically might make owning a vacation home that's not rented out unviable financially. Because say, for example, instead of 1% on $1 million vacation home, your property tax is 5%. So now you have to pay $50,000 a year to keep that property instead of $10,000 a year just in property taxes. And that might make it financially unviable to own second homes. And also you might have to have either higher rents to make up for the costs of higher property taxes, or property prices would have to drop so that cap rates are high enough that property taxes can be covered. Given that we have a housing crisis right now in most of the Western world, I think people wouldn't mind having lower property prices. That's the other downside. If you have higher property tax, you're going to inevitably have lower property prices. I talked more about this in my video on Georgism, but that's the trade-off you're going to get. So you'll have more affordable housing, less people owning second homes because it's not profitable to do so, and probably higher rents. But if you say, in theory, swapped the income tax and sales taxes and replaced it with a higher property tax, you'd probably on the net have most people pay less in total tax burden as a percentage of their income. And it'll also be more progressively distributed to those who actually own property. I mean, people who do not own property or renters are going to pay indirectly through rent, but even their indirect payments through rent are going to end up far less than what the property owners have to pay for on personal residences and other real estate that they own. And so it creates a more equitable distribution in that way. And then the other benefit really to such a system, in addition to creating more affordable housing and discouraging speculation, and more equitable, is that it directly targets the people who benefit most from the government. Landowners benefit more than anybody else from good governance. If you have a national defense, it protects your property from being destroyed by foreign invaders or attackers. If you have good roads and solid public services and infrastructure, it increases the value of your property because you don't have to make those repairs on the street yourself. You don't have to make build all the plumbing and electrical infrastructure yourself, or anything else that the government does to create and make sure everything is livable. Law enforcement and keeping crime down also increases property values. So a lot of these public services directly benefit landlords and owners of property. Like, look at San Diego versus Tijuana as the most notable example of this. San Diego's property prices are 5 times the amount of those south of the border. They're generally the same location, similar climate, everything else. The only main difference is the governance. One is governed by the United States of America. The other is governed by Mexico. Mexico is a country on the rise, but it does not have the same degree of social trust and does not have the same quality of public services as the United States does. And so as a result, the properties are worth a lot more. And that's what the market is telling you effectively by saying that. And the fact that the U.S. has the governance it does and the legal system and the rule of law also increases the value of properties. So landowners benefit from that as well. And so since landowners disproportionately get the benefits of good governance, they should be the ones to pay for it. And so far of all these tax proposals, I think this is probably the most fair and equitable way. Now, the other downside is that maybe you're limited on the size of the government because there's only so much real estate out there. And if you have less real estate construction development because people don't want to buy as much to pay as much property taxes, your income tax growth sources might be limited. The other thing, though, is another perk, though, is that it's indexed to inflation by default because the property's values will tend go up with inflation. And so as a result, your property taxes will go up with inflation. You'd have to get rid of things like Prop 13 and other implicit caps to make this work. And it does also risk displacing old people who failed to save for retirement. That's another downside to this. But it seems to be a much more equitable and much more efficient way of collecting taxes than either the sales tax or the income tax. The next one we're talking about is tariffs. Tariffs are charges that importers have to pay to bring in foreign goods. This is how the U.S. financed its government for the most part prior to the passage of the 16th Amendment in 1913. The U.S. had a big tariff on foreign goods and it allowed domestic industry to develop versus its European competitors without having foreign goods flood them and flood the market and price them out before they have a chance to develop. The main advantages of tariffs is that it's similar to a consumption tax where you only are taxed based on what the end buyer pays for. Whether it's the end buyer's a retailer or a manufacturer is importing goods to sell or create their finished product, or the consumer who's deciding to buy, say, a Mercedes-Benz instead of a Ford F-150. The other advantage is that it provides protection for manufacturing jobs in your home country and allows you to make, from a geopolitical security perspective, not outsource too much of your goods over manufacturing overseas. So you're more likely to have your own, be able to be self-sufficient and make the goods that you need to run your economy. Those are the main and also 3, it does generate material amounts of tax revenue and it is very difficult to evade. So again, it's similar to the sales tax. Instead of it being, though, it's only on foreign goods really, and it's usually a much higher level. Like instead of having, say, like a 5 to 20% sales tax or VAT, you're going to have like a 10 to 50% or even higher tariff on specific foreign goods. Downside is that it removes comparative advantage. There are plenty of economic research to show that free trade on the net is good for economies as a whole. And so by eliminating like the advantages of comparative advantage, you are going to have higher costs of goods for consumers and a less efficient economy. If domestic producers don't really have the threat of international competition, they're unlikely going to make as good products or make them as competitive of a price as they would have if they had to face international competition. And 3, if people adjust completely and solely just buy domestic products, then you're going to have a problem with that tariff. It's going to fail to generate the revenue you need to. It's unlike the property tax. People just aren't going to stop using buildings and all camp. Like, there's not really a way to work around. Whereas with tariffs, there is a way to work around, and it's the easiest one really to work around of the major forms of taxation. The other side is if you're a country who's a net importer, if you're a net exporter, tariffs really are not going to be as helpful because countries are going to pass retaliatory tariffs against you, which will lower the demand for your exports more than it lowers the demand for foreign imports. So you will disproportionately get hit. Net importers tend to benefit more from tariffs because they reduce capital outflow through imports, yet they get some gain from the fact that they're going to have more domestic production, and their exports might be hit with retaliatory tariffs, but since they're exporting less than they're importing, the net really, in terms of gain from the tariff, is more favorable. So it doesn't really work well for net exporting countries because of the threat of retaliation. And the Smoot-Hawley tariff is really a good example of the perils of such a policy, which is why a lot of countries, until fairly recently, have been really hesitant to bring on tariffs. I think the best balance is really just doing a tit-for-tat type policy when it comes to tariffs. Like, if some country's going to do high tariffs on you, you could slap it back on them. And that really would just encourage people to just lower tariffs overall and have more free and open trade. If you make the policy clear is that we will not allow you to use mercantilist policies to take advantage of our generous free trade policies, but if you want to be part of the free trade international order, we'll welcome you in with open arms. And then the last really tax I'm going to talk about, excise taxes are similar to tariffs and sales tax, except they target particular vice goods. And so there might be social benefits to keeping the use of those things down. I don't think they're good for generating revenue because the whole goal of excise and vice taxes is not to really generate revenue. It's to discourage morally and economically suboptimal behavior. And so if you're successful at accomplishing your goal, the tax revenue will drop and you'll have the issue of financing your government. So like the last one that could really truly finance a government is inflation tax, MMT, or just basically the government printing money to cover its expenses instead of just having taxes. And with a lot of deficit spending out there, you have a lot of governments effectively doing this right now, but nobody's really taken it to the full conclusion, and at least intentionally. Some have unintentionally done it, such as Argentina and Turkey, but in Germany during the Weimar Republic days. But the thing is that nobody's really fully decided, hey, look, we're just going to get rid of taxes all outright and instead just fully embrace financing the government through seigniorage. There are several advantages to the inflation tax in terms of political gain for politicians. First one is you don't have to tell anybody about it. You can simply just print the money and people will be like, oh, great, we get all these government services and we don't have to pay for it with higher taxes or really any taxes if you take it to its logical extreme. And so it's very politically palatable because there's no immediate short-term pain. The second thing beneficiary to this is that the government can control the printing press and doesn't rely on the business cycle or economic volatility. So therefore, you can always cover your bills in theory. The third benefit of the inflation tax is that it rewards debtors, and governments are often the biggest debtors. So it could be a way to effectively pay off debts. Or if you have a lot of voters who are borrowers in the private sector, it will be popular among them. The fourth benefit is if you're an asset holder, your assets will go up and catch up. So if you're in the elites, you are likely able to shield yourself from this tax. And for most people, you can't really get around it. That's the other benefit. There's no need to enforce compliance because all you're simply doing is printing money to pay your bills. There is no need for an IRS or any sort of agency because the inflation tax is just paid through inflation in the economy. There are a lot of downsides to this. One, it creates winners and losers that are unintended. Like when you just simply print money to cover your bills, you don't really know what things are going to go up faster than CPI or what's going to go up slower than CPI, and it could turn into a politically toxic combination. Second, once the inflation genie gets out of the lamp, it's really hard to keep it under control. And high inflation has a lot of negative social consequences. I've talked about this in other videos about inflation. And it's an easy way for your government to lose legitimacy. And since there is really no limit to government profligacy, they will just keep printing to cover things, and the government will become a bigger and bigger percentage of the cumulative net spend of GDP, and it will just be an albatross that sinks the entire economy. And eventually, at the point that the private sector doesn't produce enough real output, that printing the marginal dollar is just going to go immediately straight to inflation, and it won't even be enough to pay for the goods and services you want in real terms. People just simply reject your currency, be like, I only want to get paid in gold or a foreign currency of a country who has a credible central bank. And then it's game over. So that's really the main risks of the inflation tax. It's the most sinister, I would say, of the things because it never really has to be stated. And on top of that, it's probably the most socially destabilizing of any of the taxes because there's really no way that people can get around it. And unless you have the means to buy inflation protected assets before the inflation happens, you're going to get hurt. And eventually, even those who do are going to get hurt because of the increased crime and other negative social drawbacks that are a result of inflation trickles up into the society as a whole. So overall, these are my assessment of the major forms of taxation. If there's one I'm missing, or if you disagree, I would really like to have you comment on this channel. But I generally would have to choose, if you had to pick your poison in terms of what's the most equitable and efficient way to collect taxes, it's a higher property tax. Real estate owners probably going to hate me for this, but yeah, I would like you to make your argument on why income tax or why sales tax or why some other form of tax that I failed to mention is a better alternative. But thank you for watching, and I look forward to having more of these kind of discussions in the future.